This is TradeFlow News, bringing you relevant news and insights from around the world. TradeFlow News, enabling trade for SMEs and economies worldwide.
These are some of the key topics that we will be looking into in today's program.
First, let's take a look at the overnight headlines which are impacting the commodity markets. Even with oil prices surging towards $75 a barrel, U.S. shale producers are keeping their pledges to hold the line on spending and keep output flat, a departure from previous boom cycles. This year's run-up in crude prices, and oil output curbs imposed by the OPEC Plus producers group, historically would have triggered a drilling boom. But investors are demanding financial returns over more volume, and energy financiers are shifting to renewables, so shale firms are determined to stay disciplined. "I'm still confident the producers will not respond to the run-up in prices," said Scott Sheffield, chief executive of Pioneer Natural Resources PXD, the largest producer in the Permian Basin shale field. "A focus on shareholder returns has kept spending low," he said in an interview with Reuters.
China's state planner said on Monday it was launching an investigation into the urea market, after a surge in prices of the fertilizer. The probe is the latest action taken by the National Development and Reform Commission, NDRC, to cool price gains for major raw materials. The NDRC recently sent a team to the Zhengzhou Commodity Exchange as well as some urea production and distribution companies and retailers to learn more about the supply and demand of urea and prices, it said in a statement on its official WeChat account.
Moving on to the top news in the energy sector.
Oil prices fell on Monday after hitting their highest since 2018 earlier in the session, as a spike in COVID-19 cases in Asia and Europe put a brake on the rally before this week's OPEC Plus meeting. Brent futures fell 73 cents, or 1.0%, to $75.45 a barrel by 10:47 a.m. Eastern Daylight Saving Time, 14:47 GMT, while U.S. West Texas Intermediate, WTI, crude fell 64 cents, or 0.9%, to $73.41. In volatile trade so far on Monday, both benchmarks fell over $1 a barrel and rose to their highest since October 2018. On Friday, both closed at their highest since October 2018 as fuel demand rebounded on strong economic growth and increased travel during the Northern Hemisphere summer.
European Union countries on Monday gave the final seal of approval to a law to make the bloc's greenhouse gas emissions targets legally binding, as EU policymakers prepare a huge new package of policies to fight climate change. Negotiators from Parliament and EU member states reached a deal in April on the climate law, which sets targets to reduce net EU emissions by 55% by 2030, from 1990 levels, and eliminate them by 2050. Ministers from the 27 EU countries formally approved the deal on Monday, except for Bulgaria, which abstained.
Next, we have the top news in metal markets.
Singapore prosecutors on Monday filed 13 additional charges against a local businessman in relation to a scheme that allegedly raised more than 1 billion Singapore dollars, $746 million, from investors to fund bogus nickel trades. Authorities in the city-state have implicated NGU, a former managing director of trading companies Envy Global Trading, EGT, and an inactive firm, Envy Asset Management, in the fraud scandal, one of the biggest in Singapore. According to the charge sheets, prosecutors allege that NG, 34, cheated 9 individuals and 3 corporate entities of about $63.6 million in connection with EGT's non-existent forward nickel contracts.
Copper edged lower on Monday as slowing profit growth in industrial firms in top consumer China metals, rising inventories and low premiums sapped enthusiasm for the metal. Benchmark 3-month copper on the London Metal Exchange, LME, shed 0.5% to $9,363.50 a ton in official trading. The metal hit a record of $10,747.50 per ton in May. Profit growth at China's industrial firms slowed again in May as surging raw material prices squeezed margins and weighed on factory activity. High prices spurred the Chinese government to cool prices by releasing some of its metal stockpiles. On-warrant inventories of copper in LME registered warehouses have jumped to their highest since May 2020, while Yangshan premiums of the metal going into China languished. We will now look at the top news in the agricultural sector. European Union countries on Monday gave the green light to reforms of the bloc's huge farming subsidy program, after a 3-year battle over rules to make it greener and support smaller farms. Negotiators representing the EU's 27 countries and European Parliament struck the deal on Friday to reform the Common Agricultural Policy, CAP, which will spend €387 billion on payments to farmers and rural development, roughly a third of the EU's 2021 to 2027 budget. This deal is essential to ensure that this cap enables the transition towards sustainable agriculture, EU Agriculture Commissioner Janusz Wojciechowski said on Monday, at a meeting where EU agriculture ministers approved the deal. The new rules apply from 2023.
That is all for today's news on commodity markets. Stay tuned to TradeFlow News as we continue to provide you with more updates. We also invite you to follow us on Twitter at TradeFlow News, which allows you to watch our program on your mobile device or desktop to receive information from there.